outils. everybody please take your seats? The program is about to begin. Please welcome to the front Isabella DeWint, Business Administration and Finance undergraduate student at the Kogod School of Business.
Good morning, everyone, and thank you all for being here. My name is Isabella DeWint, and I'm a third-year Business Administration and Finance student here at the Kogod School of Business. Throughout the past 5 semesters, I have had the honor to serve as an analyst, portfolio manager, director of research, and now fund manager in Kogod's Student Managed Investment Fund, a $1 million student-run portfolio where we get to see how stablecoins are evolving in real time, while giving us a front row view of how innovation in finance can impact markets. It is my privilege to welcome you to the Alan Meltzer Speaker Series event. We gather at a time where stablecoins are moving to the core of the financial system, reshaping how money moves globally and expanding access beyond traditional institutions, while raising the standards for trust, transparency, and regulation. This intersection of innovation and integrity is precisely where today's conversation begins. It is my distinct honor to introduce Heath Tarbert and share more about his experience. Originally from Baltimore, Maryland, Heath is the president of Circle, where he is helping build the infrastructure for digital currency to move globally with speed, transparency, and accountability. With accountability, as well as the fact that his experience is especially compelling, not only for what he is helping build today, but for his consistent leadership through periods of significant change. From 2019 to 2021, he served as the 14th chairman of the Commodity Futures Trading Commission, leading one of the most active periods in the agency's history. During his tenure, he advanced more than 40 rules and oversaw a massive amount of crypto-related regulation. From this, it's extremely important to note that as a partner, and taking decisive action to protect market integrity, and reinforcing a simple but powerful idea: innovation only works if markets are trusted. Prior to that, he served as Assistant Secretary of the Treasury for International Markets, concurrently serving as G7 and G20 Deputy Finance Minister, and U.S. Executive Director of the World Bank Group. He also served as a Supreme Court law clerk, as Associate White House Counsel during the 2008 financial crisis, as special counsel to the Senate Banking Committee, and as a partner to 2 international law firms. This gave him incredible insight into how financial systems are built, tested, and rebuilt under pressure. This level of perspective is critical. The race to define the future of digital currency is already underway, and establishing the right framework will guide markets, economic leadership, and long-term stability to come. We are incredibly fortunate to have someone with such experience and insight with us here today. Heath is the latest prominent president we have welcomed here at Kogod. 2 weeks ago, we welcomed John Gray, president of Blackstone. And next week, we will host 3 CEOs, including the CEO of JP Morgan Health, to discuss AI and the future of healthcare. I also want to thank Dean David Marchick for leading today's conversation. With a final thank you to you all for attending, please join me in welcoming Heath Tarbert as I now turn things over to Dean Marchick.
1, 2, 3. Okay, great. Thank you. Thank you, Isabella. That was incredible. I would say that I'm proud of what you just did and also proud of Kogod for helping you present in such a confident way. I know that I could not do that when I was way past a junior in college. So thank you very much. And Heath, welcome. Thanks everybody for coming. Students are going to stream in and out because they have classes, and so don't be offended if they come in or leave. But anyway, thank you very much. I'm thrilled to have you, and I really look forward to this conversation. So thanks for coming.
It is my pleasure. It's great to be here with all of you at one of the great business schools of the nation, at one of the most important universities, the American University.
Well, thank you very much. And I understand your
my CEO's eldest son went here, so we know. I mean, this is one of the great schools, and I myself have been on campus many a times. I took a program here maybe 20 some years ago, stayed on campus, and frequented the place. So it is just a marvelous university, and what you've done here at the business school has been incredible.
Thank you very much. So, how many of the students feel like you understand stablecoin or Bitcoin? Okay, cool. Okay, how many of you have traded or invested?
Wow.
Okay, and how many of you have stablecoin wallets? Interesting. Okay, cool. I know literally very little about it, but I loved learning about it, and so I look forward to conversation. I'm going to ask Heath questions for about 30 minutes, and then we're going to open it up to anybody. So let's start with your personal background. So as Isabella said, you have this incredible career, but you have a BA, a JD, a master's, a doctorate. You're a CFA, a CPA, and a certified anti-money laundering specialist certification. So is there any degree or certification that you feel like if you had, you would be more successful? Or
a degree in wisdom, which is constantly it is a lifelong learning process. But no, it's interesting. I grew up in a family in Baltimore, sort of working class Baltimore. My parents didn't go off to college like you guys did and like I did. But education was very clear. They would eventually finish their degrees, both in business at night over time. But they emphasized the importance of education. And so that was really important to me, going to school. So I also was an undergraduate business major, business and accounting. And then the other degrees that I got them because I thought that one day I might very well be here at a university teaching. And who knows, maybe down the line, I might do that as well. So I've always been connected with academia because the future of our nation and the world is literally in this generation's hands.
The other thing I love about your resume, and we've had the privilege of working on it, I mean, you're one of the smartest people I've worked with in any role, but is that you've moved around a lot. You've been in government, you've been in law, you've been in business, finance, now kind of the digital world. And one of the things I always tell students is don't plan anything. Just be opportunistic, just be great, work hard. So when you were 22 or 25, like, did you actually have a plan for what you wanted to do, and did your career follow that plan?
Great question. And I'm reminded of the Steve Jobs speech where he said, you can only understand the dots, connecting the dots looking backwards. So no, the answer is I didn't have a plan, and it's very difficult to have a plan. And I think that was Eisenhower who said, plans are useless, but planning is invaluable. So my advice on that, what I did do was this. I had a sense that I would love to have an integrated career where I had both business, law, I knew I wanted to go to law school, but also public service. And how could you blend that? And I had some professors who had done some of that in their career. You don't know this, so I'm about to reveal something that I've never told the dean. But when I was in my early 20s, I came to Washington, lived over in North, not too far from here, actually. And I sort of thought about it. I was a first-year associate. It's a tough, grueling lifestyle. But I made a list of potential role models of people who I thought had the kind of career that I might want to have. And your name was on that list.
Really?
Your name was on that list because you had served in the Clinton administration.
Got a list.
You were a partner at Covington at the time. And these were folks I was like, wow, like one day, and so my advice would be think about people that have done stuff that you think, wow, that would be the kind of life or career that I would want to do, and start to study those people. So then a few years later, he moved to Carlisle, and I took note of that as well. Like a brilliant move, was a law firm partner, very prestigious, very nice job, right? A very cushy job, but took this leap into business and then would take the company public. So think about my career trajectory versus yours. You were actually on that list of people that I said, wow, one day. And you're still on that list because of what you've done here at American University, right? And so you're having an impact, beyond that. And so I've never mentioned this to him, but I would tell all of you to make that list of sort of people, entrepreneurs, business leaders, philanthropic people, people that you think, wow, they're living a life well lived, and start to study them. That's the best sort of planning that I think you could do.
Well, thank you very much. I'm loving this job, and I spent a lot of my career working on actually having income, and now I'm academic. Academia doesn't pay very much, but I say that I get a lot of psychic income from helping young people in this job. So let's move to Circle. Tell us exactly what Circle does and how you make money.
Yeah. So Circle was founded. Everyone's like, Circle, it's a startup. Well, it's actually not a startup. Circle was founded 13 years ago, pretty much a long time ago, by a visionary chairman, co-founder, and CEO, Jeremy Allaire, who again sent his eldest son here to AU to study. And basically, he was an early pioneer in the internet. So that's another great lesson for all of you. You guys, and we'll talk about this later, you're at the intersection of AI, at the very birth of what is going to be a revolution. Jeremy was in college when the internet was created, and he basically took the internet and has run with it ever since. He's been able to see the future before it actually happens. So in the 1990s, Jeremy was saying, one day, your computer and your television are going to be the same thing. And video, you're going to get, now, of course, we came at this thing like, duh. But back then, it was revolutionary. And he piloted one of the first companies and took it public that effectively is like YouTube today. So 13 years ago, he encountered blockchains and said, wow, this is revolutionary. Because while we can send data, including videographic data, over the internet, we can't yet send value. But blockchain technology and the cryptography underlying it would allow the first time the transfer of value. And this is effectively revolutionary. So Circle was founded, and the mission that we have today is the same mission from way back when, which is global prosperity due to the frictionless exchange of value. So the internet allows us to send value just like the internet allows us to send information, at a millionfold. And the idea is now that you can move money effectively instantaneously, at little or no cost, the amount of economic transactions and interactions will expand a millionfold, and hence prosperity will go with it. So Jeremy basically said, but what about if you could send $1 as safely, securely, and instantaneously as you can send an email? And that's how USDC, our flagship product, the stablecoin, was born.
Which is United States Digital.
Doesn't actually technically stand for
Okay,
anything
it's just
now.
USDC,
Some people had said, well, it was USD coin, but right now it's just officially
USDC. Okay.
USDC.
Okay.
It is USDC. It's known as USDC, but it's effectively a tokenized or digital dollar. And it's backed with 1-for-1 with high quality liquid assets. And it is transparent. You can go to our website and see every real dollar that's backing every USDC. That's the main thing Circle does. And of course, we have nearly $80 billion of USDC issued.
That you've issued, okay.
And so therefore, we obviously get the reserve income. It's very conservative. It's invested very conservatively, but that income generates a large portion of our revenue. But Circle does a lot more than that. So that, I think, we're known for our stable coins and our stablecoin network. We have the largest regulated digital dollar, USDC. We have the largest euro, EURC. We have the largest tokenized money market fund that's available outside the US at this point called USYC. But we also have a number of tech products. We offer wallets to developers. We offer protocols. So, for example, USDC is the only digital dollar of its nature that you can move from chain to chain nearly instantaneously through something called the cross-chain transfer protocol. So we're building that infrastructure layer. We also have a big project that we're working on now that is currently in testnet called ARC. ARC is the actual blockchain itself, a layer one blockchain that's designed for enterprise. So the thesis of Circle is essentially this. We're not a fly-by-night crypto shop. We're not necessarily interested in some alternative, system that's not part of the global financial system. Our thesis is the internet and the current financial system are merging. And out of it will be an on-chain internet financial system, and Circle wants to stand at the center of that.
So going back to kind of your business model, when you issue USDC or equivalents, you generate a modest fee for that. Then you also have reserves, 1-to-1, as I understand, a dollar for dollar, euro for euro, and you earn the float essentially. So the delta, there's a float there, so that your income will kind of go up or down based on interest rates and others. And then you have these other services that you generate fees. Is that kind of the
Yeah, that's exactly
model?
right. Though when you mint USDC, we don't normally charge a fee.
Okay.
So you give us the dollar, we give you the USDC. And Circle doesn't have at this point retail customers.
Okay.
It's mainly large institutions. So the places that, how many of you guys have accounts at one of the large exchanges, crypto exchanges? So they get their USDC from us, and you guys get it from them.
Okay, so let's go through this. So if you're, let's take an institution. Visa, your recent earnings report highlighted the extraordinary growth of your partnership with Visa, plus I think around 50 other similar financials. So when someone is in Brazil and they charge their credit card, Visa has to settle that, and they partner with financial institutions who kind of send money. But Visa makes or loses money in part based on the timing.
That's right.
Because they have so much flow that a day of getting their money earlier can mean billions of dollars. So with USDC, they can actually speed up the pace at which they settle and get money in their accounts. Is that correct?
That's exactly right. And if you think about it, right now we have a pretty decent payment system in the United States. It's not great. It's not state of the art, but it sort of does the job. Where we really have frictions are cross-border. And so if you think about all of Visa's transactions across borders, now all of a sudden that's a lot different. For example, if you want to send money from Singapore to Brazil, you have to go through all of these various hops, and it probably takes about 72 hours for all of those interbank transfers to occur. With applications that we're building, so this is another area where Circle, at least at one point, we would expect and hope to have it as a significant revenue line down the line, where we have a Circle Payments Network. So we have financial institutions as part of our network that can convert fiat currency into USDC, send it across the world, and effectively we can do what takes 72 hours in 72 seconds.
Wow, incredible. Where do you see the fastest areas of growth for USDC and the equivalent value creation that you've created?
It's hard to tell because when new use cases come online, some of them grow geometrically, some of them grow exponentially, and we're working on all of them simultaneously. So just to give you some flavor, you mentioned the card networks. Well, we're starting to partner with them. So obviously we've announced Visa, but MasterCard also uses USDC and has it available. And they just bought earlier this week a stablecoin platform that allows them to move fiat into stablecoin more readily and easily. Stripe uses USDC, and so a lot of these companies, the payment transfers are done. They have made USDC an option there. The large derivatives exchanges, what I regulated as CFTC chair, there are discussions now, and in the Genius Act itself, it sort of permits, and the CFTC has come out and said a lot of the margin that's held in the financial system could be in payment stablecoins, provided those payment stablecoins are well regulated. Think about moving money back and forth. One of the problems we have now with our financial system and margin at clearinghouses is it takes time to move the money back and forth. So you want to make sure you have enough money there to account for the risk. And therefore, you need more money if it takes longer to move that money and replenish that money. But if you can move it quicker, it could actually bring down the level of margin in the financial system and make things actually safer and more robust. We're also seeing in the international realm remittances, cross-border remittances. How many folks have family overseas or friends overseas? And a lot. Okay, and this is a very international school. And how many you receive money? Presumably, the family, you say, I need another $500. I got books and everything. Or do you use remittance services and send money? Yeah, and so it's
ridiculously expensive. I mean, they charge sometimes 6%, 7%, 8%, right?
Yeah. Have you guys started to use stable coins to move money? You have. Okay, so that is happening now, and we think that's going to really take off in the future.
That's incredible. Yeah, because the remittance business, the amount of remittances is just extraordinary, and so this is a very useful tool for families to do it safely and frankly at much lower cost and faster.
That's
because the traditional way, America is a country of immigrants. I actually published a piece yesterday, an op-ed about just how sad it is that like fewer and fewer international students are coming to the United States, and we love international students at AU, but this frictionless ability to send money back and forth is just huge for that community. Many of whom, you have nurses from the Philippines and others who basically support the Philippine economy, essentially. So,
and we've actually, Circle has partnered with institutions like the United Nations, the Humanitarian and Refugee Services, for example, to be able to send millions of dollars in USDC to Ukrainian refugees that were literally fleeing the battlefield, and there was no way to get money to them. But they had a phone, and therefore they had a wallet, and we were able. So it's revolutionary. The other thing that we've talked about speed, and we've talked about cost. The other massive, massive potential gain here, which we haven't talked about and really hasn't been realized, is the programmability. So USDC is essentially a smart contract, a couple of different smart contracts combined into one that allows you to program money. And so that really is something.
What does that mean, program money? Like, give me a use case for that.
You can program it to do certain things, to go through. And when you think about AI and the confluence, that in many ways will likely be the biggest takeoff. So you can have a smart contract that's programmed to pay your electric bill when it comes in. If the electric bill is X, if it's above X, then maybe you say you alert you, for example. Replenish money. So all of the programmatic features, it's essentially the sky is the limit in terms of what you can do when you have a dollar that you can program to do certain things and certain functions.
That'd be, I'm dealing with aging parents. My dad turned 92 yesterday, and he's a brilliant guy and managed all the finances of the family. He didn't have a lot of money, but like he's just can't do the bills anymore. And so this would be great if I or one of my sisters and I could just program and say, all right, when you get this, that would be very useful.
And then think about that. I know this business school, by the way, is head and shoulders above anything I've seen. And I've had the opportunity to speak at some of the
in AI
business schools in AI. So if you think about it, one day it is our view that the vast majority of transactions in the world may very well be agentic transactions, AI agents interfacing with other AI agents. So think about your aging parents. Think about this great student body that you have that master AI. You could literally, with something like Claude Cowork or other programs, every time the email comes in from Pepco, is that still the energy company? Yeah, that's it. Comes in, the AI agent reads it, it makes an assessment, and it shoots USDC, assuming Pepco is taking USDC to pay the bill, right? And so the confluence of AI technology and blockchain and stablecoins, that we see as the ultimate potential biggest use case down the line.
One of the other things I learned is that unlike Bitcoin, which has had a roller coaster ride, how many of you have lost money in Bitcoin? Okay, congratulations. You're regulated. Congress passed something called the Genius Act. You're now in the process of being regulated by the office OCC.
Mm-hmm.
So what does the Genius Act do, and why should that give consumers and other counterparties confidence in your product?
Yeah, so it's a great point. One of the things that Circle has always stood for is a well-regulated digital dollar. And so one of the things that I've done in my career at various places, but Circle has done it extremely well, and one of the reasons that attracted me there is they asked the question, if this is going to be the 21st century form of money, what does it look like? How should it be regulated? And essentially Circle applied those key requirements to itself far before any regulator in the world told us we had to do it.
Mhm.
And far before it became essentially enshrined in law in the Genius Act in July. So what are those things? Well, one-to-one backing.
Right. So there can't be a run, essentially, because there's one-to-one backing.
It really prevents that and has the confidence. And that's very different from bank money. One of the important features of stablecoins and why it's arguably better than tokenizing bank deposits is many of you, how many folks have learned about the fractional reserve banking system in the classroom? That's exactly right. So the idea is for every dollar that is loaned out in a bank, only 8% of it or something is essentially reserved. So when everyone comes to the bank and says, give me your money back, the bank doesn't have the money, right? Now, what we've decided in this country is that we're going to combine the payment system and the credit intermediation system. Those are fancy words for basically saying we're going to pay and lend and do all that in one big thing. But after the global financial crisis, people thought about that and said, well, why should we have a system that is so inherently shaky? And if we're going to have internet money that moves at this, literally at the speed of light, we need to have it as the most conservative form of money possible, which is every single dollar is backed basically by another dollar. On top of that, we have prudential supervision. So we have a regulator coming in. We have audits and an attestations to make sure those reserves are actually there. We apply the same ATF with the anti-money laundering, AML, CTF, counterterrorism financing rules that financial institutions under the Patriot Act do to make sure we're doing what we can to prevent and detect money laundering. And then, of course, we have just absolute transparency. So you can go to Circle's website, as I said earlier, and actually see the CUSIP numbers of the treasuries that are backing the dollars. All of those things we developed on our own because folks were putting stable coins out overseas that were literally backed by nothing. And so our view has been, if this is going to be a 21st century form of money, then it really has to work. It has to work well, and it has to be well regulated.
Wow, incredible. I read also that the country of Bermuda has now decided to actually use USDC as kind of part of their official payment system. Is that correct?
Yes, they accept USDC for various things. The government does. They have.
So you can pay your taxes. You can pay a parking fee. You can.
Yeah, and the Bermuda dollar is pegged to the U.S. dollar, so of course it makes it easy down there. They have a wonderful, young and forward-thinking premier who envisioned making Bermuda sort of an on-chain economy. So that's helped facilitate it. But if you think about it, we could do that here in the United States as well. Think about your tax return. When you file on April 15th, Imagine being able to hit the button, send a return, and literally a couple seconds later, get your refund in USDC.
100%. My son, actually, he's a senior in college and he had his internship, and so he had some income, which is nice. And they withheld taxes, and he filed his tax return and put his account in with the IRS, which he asked me if it was safe. I said yes, but hopefully you agree. And now he's waiting for his money, but that would have been great. So
Right.
that would, yeah,
And
that's
of
cool.
course, it could go the other way. You could pay the IRS, and rather than the stuff getting lost in snail mail or whatever, the government would be
Yeah.
funded.
Okay. So, as Isabella, we have a lot of folks that invest in the stock market, REITs. We also have a seed fund, so folks can learn how to invest in early stage. Your growth has been extraordinary. So 64% year over year revenue, 72% growth year over year in USDC and circulation, 100% growth in adjusted EBITDA. I know you have obligations as an officer of a publicly traded company, and we don't want you to share any material non-public information, or maybe a couple of them may want you to for their own safety. But do you expect this same type of growth going forward? Those are extraordinary levels of growth.
Look, every day we are working to build that internet financial system of the future. And as use cases come on, some of the growth, as I said, may be geometric, some of it may be far faster than that. We honestly don't know. And our view is, in the long run, the stock price, for example, will take care of itself, because if Circle truly achieves what it's meant to achieve, and building that infrastructure underlying the financial system of the future, the company will do just fine, and the revenues and everything else will sort of fall into line after that. So we're investing at this point. We're focused not just on, we are still in many ways a very young company at the beginning of what we think is going to be, and what objective commentators say is going to be a large portion of the world that is using this technology. And so we're really focused now, not always on the bottom line. The bottom line obviously matters, but right now is really the period where we want to invest and we want to build that infrastructure out.
I basically live a cashless life. I have Apple Pay. My family and I use Venmo back and forth, automatic payments. In a year or two, maybe some of the students already do. In a year or two, am I going to have Circle or your USDC on my Apple wallet and be able to pay, or share a meal with someone? Is that
Well, it's entirely possible.
Mhm.
It is entirely possible, and obviously we see a world where everyone has a digital wallet, and in that digital wallet they have a variety of things, including payment stablecoins that are regulated under the Genius Act. But the way I often describe it is, maybe 25 years ago, when we would buy something, someone would often say, "Well, I'm going to go on the internet, I'm going to buy it." We never say that today.
Right.
We're just going to buy something.
Right.
So at some point, I think no one's going to be talking about stable coins or even realize, USDC or whatever. It's just going to be, can you send me $20 to pay for the meal? Or let's chip in together and get some pizza. I'll send you $20. And you'll think of it that way. Just like now, I don't say, well, actually, Dean, could you send me 20 JP Morgan dollars to my Citibank dollar account, right? We don't think about that. We just exchange money.
Just exchange money. Okay. Two final questions and we'll open up. One is, you've had this extraordinary career. You have children who are a little pre-college, but what advice would you have for all these folks who are really interested in what you're doing, interested in your career? What advice would you have for them to have as fulfilling and a successful career as you've had?
Do a lot of self-discovery to know who you are and what matters most to you. There's an old saying, like, you don't know what's worth living for unless you know what's worth dying for. So really think about that. Think about, why are you, when you think about human life, right? It is a miracle that each and every one of us is here, right? It's like a 1 in 1 billionth chance, or some statistic like that that's crazy. So everyone in this room was put here for a reason. And I feel like your life is figuring out what that reason is and being the best version of yourself. And the best version of yourself could be very different than the best version of your best friend, right? But I feel like that's a really important part of things. So don't just go with the crowd. I was an accounting major, and accounting, by the way, was a great, great thing to learn. The basis of business decisions. That's on the textbook, and it probably still is to this day. And it was 50 years before I took the course back in the 1990s. But when I was getting out of college, I got a job at one of the big, I think back then it was the big six accounting firms, to be an auditor. I didn't want to be an auditor, right? I didn't want to do it. But everyone was like, well, you got it. I mean, you're going to make $37,000 a year, which back then was crazy. Like, I don't know, what, 100 something now? And that was more, that was significantly more than my parents had gotten up to that, only a few years before. But in my heart, I was like, that doesn't get me excited. So I did an internship with the FBI because I cared about public service and government service. And ultimately, it changed the trajectory of my career. I ended up going to law school and doing that, and I didn't become an auditor. So what I would say is, your parents may have views, you should take them into consideration. Your professors may have views. Take everybody into consideration, but at the end of the day, it's your life. Make your own decisions.
You have to do something you love, otherwise you don't have to be. Okay. Final question, and most important question is, how does a student get either an internship or a job at Circle, and what type of early career positions are you all looking to hire?
Well, we have an internship program. I would very much encourage you folks, everyone, to apply. I think what is happening here at American University under your leadership with AI is absolutely critical and can be the differentiator for all of you, whether you apply to Circle or whether you'd apply to any other company. I know past speakers have come here and said, you're not going to be replaced by AI, but you will be replaced by someone who knows AI better than you. And we actually say that internally at Circle as well, and have for about the last couple of years. But what I think AI really gives you an opportunity, so I would make sure you're facile on AI, and that is really evident because that is a major leg up. It may prove to be far more important than even the Industrial Revolution. But here's another thing about AI. You could do an internship at Circle or another great company, Google, or you could build your own company. Here's the great thing about AI, and particularly agents. When I graduated from undergrad in business, I knew I wanted to be a builder, I wanted to be a leader. But it took me years to be able to manage people. Like the first time I was actually, quote, a manager, and even as a law firm partner, you're not necessarily a manager. It took a number of years. But literally, you guys can be leaders and managers today by creating your own workforce of agents. And that is the huge revolution. You can have agents reporting to you, and you can build a business right here in your dorm room. So think about that as well. And some of you will do exactly that. And one day you'll be sitting up here and you'll be employing folks and offering an internship. So I wouldn't discount that. And companies, even large companies, folks who started their own business, who created their own organization of agents, that is immensely valuable.
Over the week, everybody here has Perplexity, and Perplexity just introduced something called Computer, which is an agentic AI tool. Over the weekend, I created 3 agents that are working for me all the time. It's just incredible. One of them, Julie's here, but one of them is kind of manages all the things we need to do, and it sends Julie and me an email of all the things we need to do every morning at 5 a.m., which I think annoys Julie, but anyway. All right, let's open it up, starting with students. In particular, we have faculty here as well, but just introduce yourself and ask any question you'd like. Let's start in the front. Just introduce yourself, what year you are.
Hello, Juan Junior Sotelo, second year student, studying finance and real estate. Thank you for coming out here. It's very much appreciated.
And tell us where you're from too.
I'm from DC in Spain.
Excellent.
And
It's working. Yeah, just do the microphone because we have a lot of people online. Yeah.
And the question that I had, obviously, stablecoins, they're very attractive to use and find a great degree of utility in emerging markets and developing countries. And how do you see it play out in terms of the transition from going on the institutional and commercial level using stablecoins, and maybe these countries and their populace uh, going from that to using their own currency? And how do you see that transition playing out?
So using their own currency. Let me just make sure I understand.
Like in Europe,
Right.
there's a European
Yep.
DC, but you could have one in El Salvador,
Yeah.
in Brazil.
Yes. So
That's your question, right? No.
local
Yeah,
fiat stable coins in other denominations.
yeah. Maybe they go from using stablecoin, and do you think there's going to be a transition where on the commercial level and on the B2B level as well, uh, the populace goes from using more stablecoin,
Mhm.
and maybe due to more political stability or whatever the case
Yes.
may be, as the country develops, they go to using their own domicile currency?
Yes. So yes, it's a great question and a complex one. So in emerging markets, as you mentioned, what we are seeing are millions, if not billions, of people around the world who don't have access to U.S. dollars, but are in a country like Argentina, for example, that has suffered tremendous devaluation. And many students come to these sorts of places and they want to say, look, I'm not trying to buy Bitcoin or anything fancy, but I want to get my money out of the local currency and at least put some of it in dollars, because the US dollar, for all the challenges our nation has, the US dollar is still the world's reserve currency and the currency of global trade. So more and more people, we're seeing people just buy USDC simply to hold it, which is another use case. At the same time, Circle's view is the power of USDC is not the actual digital dollar. Yes, you can trust it, back one for one, etc. Everything I said before. But the power of USDC is the network in which it belongs. The fact that you can send USDC over 30 different blockchains it's native on. The fact that people all around the world use it. Our wallets allow us to be able to send USDC to up to 600 million people around the world. But ultimately, our view is other countries are going to come online and they're going to create stable coins in their own currencies that have the same kind of robust backing. And we're working with partners around the world. Circle doesn't have any interest in necessarily creating our own, you know, Indonesian stablecoin, for example, local currency stablecoin. But we would love to work with an institution, a respected, trusted, regulated institution in Indonesia that would be able to issue it and make it entirely compatible, interoperable with USDC. That makes that currency and that country far more valuable, but it also makes USDC and the Circle stablecoin network far more valuable. So we see both things happening. We see more and more people, retail folks, using digital dollars like USDC, and we also see the introduction of other locally denominated fiat currencies that are part of the Circle system, and they're part of the new L1 blockchain network that we're building called ARC.
That's great. Okay, next question. Right here, UC Dublin.
Yeah, sorry. I know I'm wearing the. Hello? Yeah, I'm wearing the sweatshirt of my old school. Sorry.
Okay. And you're just introduce yourself.
Yeah.
And what?
My name's Owen Landy. I'm studying business administration. And before here, I worked a little bit in DeFi and smart contract development. So I wanted to ask about, Circle's competitors. So there's PYUSD now with PayPal. There's USDT, which has been around for a while. There's AUSD, and then there's also USDE. There's all these other stablecoin competitors. So I spoke recently with someone who worked at AUSD. Their perspective is that Circle doesn't have to worry about them. Everyone's kind of staying in their own lane because there's so much growth that any regulatory win is a win for everyone. Would you say that that's the case? Is there a particular competitive edge for USDC over these other stablecoins?
Yeah, so first of all, I think we obviously take all competition seriously, and every business school should teach you that. So we don't take anything for granted. But to your point, when PayPal issued PYUSD, their coin, you can sit down, feel free. We were excited at Circle. We were excited because this was before the Genius Act. And we obviously had USDC out there, but the fact that PayPal, a very well-established company, said, we're going to make a bet on stablecoins. Now, their circulation remains significantly pretty low, but the fact when PayPal jumped into the market, that in many ways was great for Circle because it showed that our thesis all along that this would become mainstream was actually happening. You have other coins out there that you mentioned, USDT. It's often known called by is Tether. Tether. Tether's focus has been largely on offshore financial systems. It's based in El Salvador, and it has not sought the kind of regulatory licenses that Circle has. So, for example, Tether is not permitted in the European Union under their regulation, which is called MiCA. And at least at this point, they've not signaled that they're interested in having USDT itself be a Genius Act compliance coin. So Circle's taken a different path. So I would say they are obviously a competitor. They're the largest circulating stablecoin in the world. They're not necessarily backed one for one with the same liquid assets that Circle is, but they're out there around the world. It's an important part of the global stablecoin ecosystem. But Circle has been focused more on the regulated sector, and particularly large financial institutions, the traditional financial system becoming Genius Act compliant. So in some ways, they may not be a direct competitor in the long run. They're focused on different markets and places that, for a variety of reasons, including sanctions and others, we're not necessarily interested in being at. Our view is that in the end, people around the world, regardless of where you are going to want a well-regulated stablecoin that is overseen by the U.S. National Bank regulator and subject to the highest standards. So we believe that we will win in the end and prevail. But as you said, the market is growing so fast that there's enough room for a variety of actors. But we do think that it's likely a winner-take-most market because here's the issue. You can have a anybody can issue a payment stable coin. The business school, right? Kogod could issue a payment stable coin. But ultimately, if there's no utility there, if it's not accepted around the world, if it's not on 30 blockchains, if people aren't transacting in it, it's really hard to build those network effects. So I think we're welcoming other folks into the stablecoin industry, but ultimately I think it's really hard to have traction. Circle has invested over the last decade in building on and off ramps all over the world. We have a network of global banks. We have a network of global exchanges that use USDC, and all of that takes time to build. So it's the really important part for the business school is it's not the stable coin itself that's valuable, it's the stable coin network.
Right. And most students are too young, but one has a lot of confidence in their bank and their financial institution until there's a crisis, and that's scary. I know that, for example, during the Silicon Valley bank crisis, I'm invested in a bunch of venture capital funds, and I had sent money through Silicon Valley Bank right when it closed, and I was like, oh man, I might lose all that money. So confidence is really important in being highly regulated. I think that gives you a huge advantage. Okay, next question. Yes, right here. Just introduce yourself.
Thanks. Hey, sir, my name is Lennon. I'll be going to American next year and majoring in finance. I took the day off high school today to come here and meet you. Right. So, yeah.
You're going to get in trouble
finance and real estate.
You're not going to get in trouble with your teacher.
We'll write you a note, right? Dean, can you write him a note?
Yeah,
right.
We won't tell our admissions office that you cut.
But my question was, Dean Marchik almost touched on this, but where do you see the banks and financial institutions that we use today going in the next, 13 years? Because, Circle was founded 13 years ago. 13 years from now, where do you see Circle? Where do you see USDC? And where do you see the people that don't adapt and the people that do adapt in the institutions?
Great question. You're already getting your business school education, I can see. Obviously, I think this is a transformative technology, and therefore people need to understand how to use it. Now, there still is a massive need for banks because banks do that credit intermediate, they do the lending that we need to generate economic growth. But the real question for a financial institution, if I was sitting at a traditional bank, would be, how am I thinking about the new on-chain financial system? And am I taking my products and services and thinking about putting them over blockchain. And my customers today who have bank accounts with me, I want to make sure when they have crypto wallets, those wallets are bank wallets and not Robinhood, Coinbase, Kraken, the competitors, right? So if I were in the banking industry, I would be saying, we're going to offer a suite of wallets out there. So many of the banks that, for example, Circle works with, we help provide our wallet services so the bank can create those wallets, brand those wallets under its own name, and have its own customers having USDC connected still with the bank as opposed to outside the banking sector.
That's great. Great question. All right. Next question back here. And then we'll go to you next. Okay. Just introduce yourself. What are you studying?
Morning. Thank you
What
for
are your
being
thoughts?
here. My name is Arun. I'm doing graduate studies in finance. Um, Recently looking into stablecoins and smart contracts. So a couple days ago, Chairman Atkins from SEC announced the token taxonomy. What does it mean to Circle, and what does it mean to the students here? Because I think there were some safe harbor exemptions for startup community. So what is the interpretation of that?
Yeah, it's really important, and they just put out a lot of guidance in this area. And I should say that Chairman Atkins is doing an amazing job with the SEC, who really understands that this technology is transformative and is pushing it forward. At the same time, a lot of these things are being debated in the market structure bill, also known as the Clarity Act, in Congress. It's really important as a former financial regulator to make sure you create the right distinctions between types of digital assets so you can regulate them properly. So the way I look at it and the way I read the guidance is, first of all, you have payment stable coins. This is effectively 21st century versions of money. It's regulated in the Genius Act, and it has the bank supervisors at the national level and the state level that oversee that. Other digital assets then that aren't payment stable coins, and there are some stable coins that don't meet the definition of a payment stable coin, like some of the competitors of Circle that I was talking about that aren't necessarily backed one for one. But those are in a separate category. And then you have other digital assets. And the question becomes, are they a commodity or are they a security, right? And that's a complex question, but the way to think about it is this. If you have something that is a commodity, you know what it is. And its value derives from the inherent value of the commodity itself, as well as supply and demand. Gold, wheat, and in a modern case, Bitcoin. No one controls Bitcoin, and no one has the ability to make Bitcoin more valuable or less valuable on their own. There's nobody when the white paper was built and Bitcoin was sent out, it went off on its own. Security is different. And so the security laws are written to protect investors where there's an information asymmetry between the investors and the people that are basically issuing that investment. Essentially, you're relying on the efforts of the people that are behind in making that digital asset that's a security for the value of that security. And in that instance, you need a different regime where the investors get the information that they need and the regulators checking to see whether that information is accurate. You don't need that for gold because gold is gold. As long as it's specified that it's so many ounces and it meets the definition, but for a company or a digital asset that's dependent upon a group of people behind it. And so that is the regime that's basically been created. And safe harbors have been created to make sure that people know when something is a commodity versus when there's a security. It's a complex area, but hopefully I've explained it at a basic enough level that you kind of get the gist.
All right, you and then Professor in the back, and those will be the last questions. Yeah, just introduce yourself.
Hi, Heath. It's so great to meet you. My name is Falet Jamal. I'm an accounting major here. It's so great that you guys are growing your company, but then also contributing to humanitarian aid. I talked a little bit about this with Dante and Tamara, and they explained it to me a little bit. And it was so great that you guys are contributing. But what are some challenges that you go through with sending money to crisis zones, and how do you ensure compliance, and how do you aim to grow within that area?
It's really important. It's a great question. It is very difficult. We have some videos on our website, for example, in Venezuela during the COVID crisis. We were able to get money paid to first responders when they couldn't use the banking system. But we did that through partners, and we also did that through working with the US government. And so I would say we're able to do great things like that. We're able to distribute money to Ukrainian refugees. We're able to distribute to other places in need because we have good local partners on the ground. And we're able to establish safeguards to make sure that no one runs off with the money. So we look to partner with people who know what they're doing, NGOs, other governmental organizations, to be able to provide that safeguard. So we're not sending money to people we shouldn't be sending money to.
Great. Okay, last question, Professor. Yeah. Just introduce yourself.
Hi, my name is Chang. I'm a faculty member in finance here at Koga. Thank you very much for coming to AU. I really enjoy your presentation today. You mentioned that you published the QSIP of each treasury securities that back each USDC token. So out of research curiosity, I'm interested in how do you manage the weighted average maturity of your portfolio? So
Yes.
suppose when customers redeem your USDC token for, let's say, a Chase token or
Yep.
Citi token, do you usually just let the underlying securities mature, or do you sell in the open market?
Mm-hmm.
And the second question is how much repo do you use? And another, you mentioned you also compete in the offshore dollar system. So apparently it's much better than the banking euro dollar system. But how does your portfolio differ from, let's say, a European money market fund or Asian money market fund? So thank you very much.
Yeah,
Just some insight.
absolutely. Great questions. At a high level, there's a list of reserve requirements of very, very safe assets. The vast majority of our reserves are actually held in a BlackRock money market fund that was specifically designed for Circle, called the Circle Reserve Fund. And it's in that fund through BlackRock's website that you can see the QSIPs effectively. We also, though, have a large portion of the, uh, the reserve held in cash at banks. And we have the cash pre-positioned around the world at various reserve banks, most of which are globally systemically important banks, meaning they're the very best banks you can have. BNY Mellon, for example. And so we're constantly, so the portfolio duration is very, very short. And the fact that a significant amount is held in cash makes that duration even shorter. And so for the most part, we're talking about T-bills, or we're talking about durations of even treasury bonds that are still going to be expiry within like 90 days or something like that. And this is all laid out in the Genius Act. So our treasury team is constantly looking at the composition of the reserve to ensure that we have the sufficient liquidity needs in the United States and around the world to be able to support redemptions. Under MiCA, we have reserves held in France because USDC is issued separately in France under the European rules, and they have a different set of reserve standards. And then obviously, we think very carefully about balancing reserves around the world. So at any given time, the money is there when you need it. But the important point is the reserves are so liquid that it's very easy to move money around. But our treasury function does exactly what you talk about. And some of those involve repos, reverse repos, to make sure that we're getting the funds we need.
Amazing. So before I close, I just want to encourage all the students to next week. This session on AI and the future of healthcare is going to be incredible. Think about how frustrated all of us are with the healthcare system. You call a doctor, or you need an MRI, you wait on the phone, they don't contact you. The quality's not that great. AI is going to change healthcare more than perhaps any other industry. So next week is going to be, I think, really incredible. Heath, thank you so much for coming. What you're doing is just fascinating. And I know I learned a lot from you, and the students did a lot about not only your industry, but also leadership. And we look forward to watching your continued rise and impact with pleasure. And so thank you very much for spending this time with us. Really
It's been
appreciate
a true pleasure. Great to be here. Thank you so much. Thank you. Thanks everybody for coming. Yeah, hey, let me turn this off. Where are you in high school?